Hi, welcome to another video episode of Wealth, Healthcare and Retirement Strategies. I have something exciting for you. In this video you will discover how the ultra-rich legally pay $0 in taxes, IRS audit-proof strategies for 2026. We will be unmasking the wealth code. How the ultra-rich achieve legal zero tax. These are secret tax loopholes you can take advantage of. Before we dive in, if advertisements should interrupt this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this honest, valuable information for free. Now let's continue. The ultra-rich can and routinely do pay absolutely zero in taxes. Yes, you heard that correctly. Zero. This isn't about tax evasion. It's not the shadowy world of illegal offshore accounts, and it's certainly not about dodging the law. What we're talking about is a set of sophisticated, legal, and completely audit-proof financial strategies that are in full, perfect alignment with the dictates of the Internal Revenue Service, or the IRS. This isn't the kind of information you find on a typical personal finance blog. This is the true financial blueprint of the 1%, a roadmap they follow meticulously, year in and year out, to optimize their fortunes. Before you jump to any conclusions or assume this presentation is a collection of shady loopholes or a fantastical, get-rich-quick scheme, let me be crystal clear. What I am about to dissect are real, legitimate, and entirely IRS-compliant tax strategies that the wealthiest individuals have utilized for decades, and which they continue to employ with stunning effectiveness today. The core difference lies in the way they approach the entire concept of taxation. The average person asks, "How do I pay less tax?" The wealthy, however, are thinking on a completely different plane, posing the strategic question: how can I make the tax code work for me instead of continually working against me? They view the thousands of pages of tax law not as a set of punishments, but as a giant instruction manual for legal wealth creation. The secret to this incredible financial prowess isn't genius-level market timing or a sudden stroke of luck. It's an absolute, intimate mastery of the existing rules. The wealthy don't just read the tax code. They hire the top legal and financial minds, many of whom actually help draft or influence those very rules, to analyze it for them. Instead of perpetually fighting the system, they decide to leverage it, treating the tax code as the ultimate playing field for financial strategy. And here is the most important, and perhaps most encouraging, realization. Every single one of those advantages, every strategic loophole and benefit, is technically available to anyone who simply knows how to correctly structure their finances and meticulously use the system to its full capacity. So, what is the practical application of this strategic mindset? It all comes down to a process I call repositioning income, a subtle yet profound change in how money is legally recognized, through which channels it flows, and critically, the timing of when it eventually gets taxed. The wealthy understand a fundamental truth of the IRS world. The classification and the timing of your income are not just minor details. They are the single most important factors that determine your ultimate tax liability. This isn't about hiding money. It's about changing the money's legal nature before it ever reaches the personal tax return, transforming highly taxed ordinary income into lightly taxed, or even untaxed, long-term capital gains or distributions. To fully grasp the magnitude of this strategy, we first have to look at how most people earn money. which is unfortunately the worst possible way from a tax perspective. As individuals receiving a regular paycheck, or W-2 income, you punch the clock, the money comes in, and before it even hits your bank account, a huge chunk is automatically ripped out for taxes by your employer. What is left over is what you live on, what you save, and what you try to invest. This is what financial strategists refer to as being taxed at the absolute top of the food chain, with the highest possible rates applied instantly and without any prior deductions or engineering. The wealthy, by contrast, avoid this structure like the plague. The ultra-rich operate an entirely different game, one based on the construction of what I call the entity wall. This is a powerful, protective, and perfectly legal financial layer built from a strategic arrangement of legal structures, which can include carefully crafted limited liability companies, LLCs, S-corporations, complex trusts, multiple holding companies, and sometimes even a dedicated family office. The entire purpose of this wall is simple yet revolutionary. When your capital and income flow through these various entities, you, the owner, gain the legal authority to decide exactly how that money is classified and treated before it ever has to be recognized as personal income. This layering of entities is not tax evasion. It is sophisticated tax engineering. It allows for the legal reinvestment of profits, the strategic deferral of income recognition to a later tax year, the immediate expensing of costs, or the shifting of funds between related entities, all within the bounds of IRS regulations. If you imagine money as water, most people let all their water gush directly into a single taxable bucket, but the ultra-rich don't. They direct it through a complex, customized system of pipes, each one designed with its own flow control valve and temperature setting to minimize leakage to the tax collector. They are effectively diverting the stream of taxable money before it ever gets to the official spigot. One of the most powerful and often overlooked strategies is the decision by the ultra-rich to legally transform their personal wealth management into a bona fide business. They accomplish this by setting up a formal family management company or a family office, which operates and is taxed much like a highly specialized private investment firm that is solely dedicated to managing the family's vast assets. This office can oversee a complex portfolio of investments, properties, and various operating businesses, serving as the central hub for the entire financial ecosystem and, most importantly, charging professional fees for its services. The true genius of the family office structure is how it functions as an expense mechanism. The family office charges management fees to the various underlying entities it oversees, the real estate LLCs, the holding companies, or the operating businesses. Critically, those management fees are legally classified as deductible business expenses for the entities paying them. What this means in practice is that the ultra-rich are legally moving significant amounts of money around inside their own closed ecosystem, using a perfectly compliant business structure to systematically lower their taxable income at every single step of the process before it ever filters down to their personal 1040 form. It's vital to recognize that the IRS actually allows for this powerful system, but the entire structure must be real and rigorously executed to maintain its legal standing. The rich don't just informally move money around. Their structures are backed by real contracts outlining services rendered, legitimate corporate board decisions, and above all, impeccable documentation of every single transaction and fee. This is why the wealthy invest heavily in top-tier accounting and legal firms. They don't hide their activity. They diligently justify it with a mountain of paperwork. The only way to win in a tax audit is to have more and better evidence than the auditor, and the wealthy always ensure they do. Now let's transition to the key strategy behind generational wealth, which explains why wealthy families seem to retain and grow their fortunes across decades. The intelligent use of trusts. A trust is far more than a simple legal document for inheritance. When properly drafted, it becomes a powerful financial machine that can legally own virtually anything, from private businesses and real estate to stocks, bonds, and even life insurance policies. When structured meticulously, a trust can enable the massive transfer of wealth and capital without simultaneously triggering devastating major transfer taxes, which is the key to preserving a dynasty. Consider the Dynasty Trust, a truly powerful tool. This type of trust is specifically designed to last for multiple generations, sometimes spanning decades or even centuries, allowing assets to be legally passed down to heirs time after time without being repeatedly subject to massive estate or inheritance taxes upon the death of each beneficiary. Then there is the Strategic Grantor Trust, which allows the creator to retain a measure of control and management authority over the assets while legally removing them from their personal, taxable estate immediately, shielding them from future estate tax exposure. The ultimate strategy involves the sophisticated layering of these complex structures. The wealthiest families rarely just have one simple trust. They might have a single, overarching family trust that legally owns a holding company, which in turn owns a series of underlying LLCs, which finally own the specific income-generating assets like properties or stocks. While this intricate arrangement sounds dauntingly complicated, for the financial minds managing a massive fortune, it's simply the logical and routine structure required to ensure legal compliance and maximum tax efficiency. It's just another Tuesday for their legal and finance team. This next strategy is pure genius, and when executed correctly, it is 100% legal. Every business carries various forms of insurance for liability, property damage, business interruption, and more. But what if you could legally own the insurance company that provides the specific, necessary coverage to your operating business? This is the concept behind a captive insurance company. The ultra-rich create their own small, regulated insurance firm, a captive, specifically tailored to ensure the unique risks of their main business interests. Here's the financial power dynamic. The main operating businesses owned by the family pay substantial premiums to the captive insurance company for their coverage. These premiums are legally classified as tax-deductible expenses for the operating business, immediately lowering its taxable income. Meanwhile, the captive insurance company collects all those premiums and, due to its specialized legal status, can invest that capital and potentially generate growth that is often tax-deferred until much later. When correctly structured with proper risk distribution and actuarial reports, it serves as both a powerful wealth accumulator and a massive tax saver. It's important to understand that the rich don't just build these incredibly complex financial systems. They tirelessly and meticulously defend them against any possible challenge. They employ top tax attorneys to issue formal, written legal opinions before they execute any major new strategy, guaranteeing compliance before the fact. They document every single corporate meeting, every single board decision, every valuation, and every major transaction, compiling volumes of evidence. This incredible preparation is precisely what makes their structures exceptionally audit-resistant. Most people live in constant fear of an audit, viewing the prospect as a catastrophic financial event that must be avoided at all costs. The wealthy, by sharp contrast, are completely prepared for them. In fact, they operate on the assumption that an audit is always a possibility and structure their entire financial world around successful defense. If the IRS ever decides to knock on their door, they don't just have excuses. They have literal, organized binders full of legal paper trail proof showing that every single move, every deduction, and every entity flow was perfectly within the letter and spirit of the law. Their preparedness is their ultimate shield. This is arguably the most fundamental and largest strategy of all. The wealthy don't aim to eliminate taxes entirely. They strategically control when they pay them and, more importantly, what kind of income it is. A critical distinction is made between ordinary income, which is taxed at the highest rates, and capital gains, which are often taxed at significantly lower rates. Consequently, instead of drawing a high taxable salary, the ultra-rich strategically take their compensation in the form of equity, preferred distributions, or something called carried interest. Beyond classification, they are masters of timing. They frequently employ strategies like installment sales, tax-deferred real estate exchanges, like kind exchanges, or sophisticated deferred compensation plans, all designed with the primary purpose of pushing the recognition and subsequent taxation of income years down the road. Why is this so powerful? Because when you gain control over the timing of taxation, you gain control over the financial outcome. A single dollar of income that is strategically deferred today is a dollar that can continue to compound, grow, and generate new wealth for years before it is eventually taxed, potentially at a much lower rate, or even in a different, more favorable jurisdiction. Finally, it's worth noting that while many wealthy individuals are genuinely generous, their philanthropy is also intensely strategic. They utilize tools like charitable remainder trusts, private foundations, and sophisticated donor-advised funds, DAFs. These powerful tools allow them to donate appreciated assets, immediately claim a substantial tax deduction in the present year, and yet still retain a significant degree of control over how and when those donated funds are ultimately distributed to causes later on. This is how you often observe billionaires giving away billions of dollars while simultaneously optimizing their entire tax footprint and still managing to maintain, or even substantially grow, their overall net worth. It's not a contradiction, but a reflection of a perfectly orchestrated financial structure. Subscribe so as not to miss our next value-packed video. Click the thumbs up button to give us a like for bringing you this vital free information. Comment below sharing a helpful tip on retirement wealth and healthcare that will benefit others. Disclaimer: the information in this video is solely for equipping, educating, and empowering.